My name is Dutrio. I'm a partner at Bain Company. We're seeing the world economy evolving. The players are still the same. The major players that have dominated the world economy over the years have remained the same. But we're seeing a shuffling of that pack and changing in some of the trends as we look forward to 2020. What we're seeing, though, is that the financial economy continues to expand. If I start looking at the regions in terms of their domination, the world economy primarily has been dominated by investment from China with expansion in production and consumption in the US. When we look at consumption patterns going forward in the major players, the Eurozone, a key player, the US, a key player, Japan, India, and China. What's happening is China's growth China has been the engine of global production or global investment with a growth rate of about 10%. We're seeing that tailing off and getting towards the lower half of the single-digit growth, so it's about 6%. And we're seeing the US, on the other hand, showing signs of recovery. Is recovery in employment in the UK, in the US. New sources of energy, greater energy production. There is what we call a demographic dividend in the US. If you look at the composition of the US population, unlike some of the areas that I'll touch on, the US has got a much younger population and a growing population, and that bodes well for their consumption or consumption-driven growth. If I turn to the Eurozone, which has really been a sad story of stagnation and potential threats to the Eurozone cohesion, that will continue. There is some stability, but the stagnation, we see it as continuing. Not much growth coming out of there. The demographics are skewed against the Eurozone's prospects. The aging population, not that much in terms of growth in consumption, higher savings, not many areas to invest with the right levels of returns. Japan and India are question marks, where Japan with Abenomics and trying to get out of the deflationary environment that they've been for the last 20, 30 years, the jury is still out as to which way they'll turn. But we see that we're cautiously optimistic about where Japan is going to. India, on the other hand, has depended primarily on capital inflows from outside, and that continues to be the case. Obviously, with the new government, with Modi coming in with his business-friendly policies, we see that maybe beginning to bring back the inflows of capital into India. They have been impacted by the general retrenchment from emerging markets, and that may continue. But the interesting thing about India is not at the country level. If you look down beyond the country, there are a number of states that are doing quite well. I think it's because of the structure of their government, where it's much easier to make progress at a state level, but there are some states that are making progress. So as we look ahead, we see that, and our thesis has been that there's a lot of capital flowing in the world looking for the requisite returns, and those requisite returns are not necessarily easy to come by. So we see the world going forward continuing to be awash with capital. There's lots of capital looking for very few investment opportunities. We see the people who come up, originators of good ideas, tending to attract the most capital, and the world continues to be demand constrained rather than supply constrained. Growth will come from looking for new sources of demand, and what drives demand is obviously in the market is the amount of savings, the wealth in the economy, and also the demographics, where you have a younger population that is still acquiring assets, they will stimulate demand. Where the population is much older, there is a challenge that growth will be difficult to come by. when you think about Africa within that context, we've been primarily a resource-driven, export-led economy, and those economies that have just gone through very quickly have been the destination of most of our exports. So if the prospects for the Eurozone are not that bright, it means that us as the suppliers to the Eurozone, our prospects also are dimmed in that respect. China, which has been consuming most of the commodities that coming out of the continent, they're retrenching from their 10% plus growth rates, means that a reduced demand of our commodities, which has a negative impact on our growth prospects. And if you look at recently, some of the commodity prices have come off the boil, iron, oil, etc. That has a significant impact on us. And that's really is our view of where we see the world going over the next 6 to 10 years.